Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Enphase Energy reported earnings after the market closed yesterday, and the market's reaction is not very good at all, despite earnings looking pretty good. What exactly is going on here? This is one of the times where it can be kind of confusing what the market's reaction is versus what a company is actually reporting. So that's what I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And I want to start with the chart for today for Enphase. You can see here that as I'm recording, shares are down 23%, so a really significant drop for Enphase. But the other thing I want to note here is this is a company that still has a market cap of $23 billion and a PE ratio of 61.5. Now, this is probably not updated for earnings today, but still a very elevated PE ratio. So why is that really one of the reasons that the stock is coming down? Well, this is a look at the earnings report. I'll just highlight some of the high level numbers here. $726 million in revenue. GAAP gross margin was 45%, non-GAAP of 45.7%. Remember that number. Earnings per share of $1.02 on a non-GAAP basis, $1.37. And then free cash flow of almost $224 million with $1.8 billion in cash on the balance sheet. So a ton of cash for Enphase. Here's a quick look at the trends, and you can see there's been a tremendous amount of growth since the first quarter of 2022. So that's exactly what you want to see. But what investors did not like is guidance. And this is the reason here. Revenue expected to be $700 to $750 million. Remember, that's down slightly from the first quarter. And in a lot of parts of the world, we should see demand increasing in the second quarter because these are sunnier months. It's easier to install a solar system in the Northern Hemisphere in June than it is to install one in January. So this should be a much better quarter. GAAP margins. Remember, I highlighted 45% GAAP gross margins last quarter. That's expected to fall to 41 to 44%, a little bit higher on a non-GAAP basis, which pulls out stock-based compensation. So we don't necessarily want to do that. And then operating expenses are going to be about flat, $155 to $159 million. So on the surface, it absolutely looks like Enphase Energy is performing well. And it is. The company is extremely profitable. It's growing year over year. The challenge is all of that growth is already priced into the stock. And what investors are worried about is that growth is slowing and maybe even coming down. And there's going to be pressure on margins. This has been a concern that I've had for Enphase and its biggest competitor, SolarEdge, for quite a while now. It's one of the reasons I've missed the run up on the stock, because this part of the value chain, the inverters, the power optimizers, that has typically been a more of a commodity product in solar energy. And both Enphase and SolarEdge have done a really good job to make those products smarter. They're now required in a lot of jurisdictions. This has been an absolute boom business, and there's been a huge tailwind behind them. But eventually, competition is going to start coming in. And these are not products that are ultimately sold to the end customer. So you're really reliant on installers buying your products for this very high margin. And at this point, the inverter and the power optimizer, microinverter specifically for Enphase, is more expensive than the solar panel. So I just think there's going to be pressure on that cost. And that's what's going to push margins lower. This is something we've seen over and over again in the solar industry and in manufacturing, is as a company reaches scale, they generate incredible profits. It seems like they have this impenetrable moat. And then somebody comes in and says, hey, we'll sell you a very similar product for a much, much lower price. And you can see a 45% gross margin. That's an incredibly high gross margin for any product in energy. That's what I think the concern is today, is that we may be past both peak growth and peak margins. So we will see exactly what happens, but that's what the market is reacting to today. So that's what we're going to have to keep an eye on going forward for Enphase and SolarEdge as well. But leave your comments about the earnings report in the comment section below. I'd love to hear from you. Don't forget to follow Rive Investing. Thanks for watching, everybody. I'll see you here next time.